Well, with respect to the market, we've been of the contention for some time that a lot of what you've seen in terms of the fiscal stimulus and other efforts was certainly providing support for key areas of the economy. And that can persist. There are longer-term considerations as we've seen this rally now as terms of what happens with Main Street and then the implication for, say, consumer-related companies. But we feel comfortable. Our overall portfolios, we're still invested, although we're slightly underweight risk in this environment. And so, again, we think the markets can continue, but we are concerned as we look longer in terms of some of the long-term economic implications.
Yeah, so give me a sense as to your underweighting at least a little bit when you just mentioned in terms of risk. Is that a recent move on your part, and what was it promulgated by?
Well, the underweight that we have is actually something that we've moved to really in the last 2 months. So if you think about when the market traded off heavily, we actually felt compelled to stay in risk assets, and we're actually slightly overweight. But as we move through the cycle, we're always looking at our asset allocation. And so in our previous months, when we looked in May and in June, those became opportunities for us to move from what was a slightly overweight position to a slightly underweight position. And to be clear, where we've taken some of that weight off the table would be in areas, for example, like emerging markets, and where we've balanced our portfolio a little bit are in areas like a little bit more of a commitment to, say, investment grade bonds.
Shundrawn, good to see you. Good morning. It's John Fort. So I want to talk a little bit about ESG, environment, social, and governance. I know that's an area that you focus in on. We're used to thinking about long-term benefits when we talk about ESG, but with the S&P near these all-time highs, I wonder how investors who are looking at ESG should think about the potential downside. Is there protection within ESG for the downside? If so, in what areas? Or are there spots that are likely to suffer if we turn down a bit from here?
Yeah, so the interesting thing about sustainability is I'm going to make an argument that there is investment merit both clearly for the long term and for the short term when we're looking at environmental, social, and governance criteria. One of the things I would offer, John, is when you look at those criteria taken together, the empirical evidence shows us that you often get better risk-adjusted performance with the companies who, in a sense, rate higher or score better in those areas. Where we would see that tangibly, you look at something like MSCI's ESG Global Index. And so we've seen through the first half of the year a 1.1% outperformance against the equivalent of a non-ESG global market index. So that's just to give you an example. And you can appreciate with compounding, John, if we were looking at that over an extended period of time, what that would mean to an investment portfolio. You see the same thing coming out of research, say, for instance, for Morningstar, when they're saying about 44% of ESG funds actually were in the top quartile performance in the first quarter, and we're seeing that persist also as we get the results and dig through the second quarter.
Well, what I worry about with ESG, kind of thinking from an investor's perspective, is what's really all being included there, and do you end up, with Tesla included, and then some other stock that's doing something that's entirely different, where you end up with a bundle of things that don't necessarily make sense altogether, and something pulls you in a direction in one of these funds that you didn't expect. How should investors think about the total makeup of one of these funds and really understanding what they're getting into?
Well, first of all, John, there are different types of funds. And so what I would tell you is ESG, the evolution over time, it's much more empirical. And so when you think about the kind of criteria, I'll give you an example. From a governance standpoint, we see where there's gender diversity on boards, you have to get past a minimum of 20%, that those companies tend to outperform. But what I want to be clear on is this is not something that's just thematic. When you're looking at it, you can measure this as companies are disclosing and reporting more of this information in a variety of categories. And so I think your point is right, John. I would say all ESG funds or investment solutions are not created equal. The level of transparency that we have now, the kind of work that a number of enterprises and third-party analysis going on in the marketplace is providing for people to be able to assess those, I think is greatly improved and will only continue to improve.